Hi, David Basnice here, Chief Economist at Beta Shares. This is a snapshot of my latest market trends report for the month of August. And just reviewing the month that's passed, we did have a pullback in equity markets, principally on the back of a lift in bond yield. So the US 10-year bond yield, for example, lifted 0.15% to 4.11%, and as a result, the global equities, the MSCI All Country World Index, pulled back 2.1%. The S&P 500 was down 1.6%. So really, I guess the theme of the month was higher for longer interest rates, the so-called no landing scenario, the idea that the US economy in particular may remain overly strong and maybe the central bank needs to raise rates more or a lot more, and in particular, the hopes of interest rate cuts as early as the first half of next year dissipated. So that was, I think, the main theme. And if you look through the data, things like US consumer spending remained pretty solid. Now, I guess importantly, though, what we did see as the month progressed is that those, I guess, no landing fears, overly strong growth, were counterbalanced by the fact that most inflation reports globally, in the United States and even in Australia, tended to be, no worse than expected, and in fact, in many cases, a bit lower than expected. So, although there was a sell-off in equity markets over the month on the back of higher interest rates, we've seen interest rates, bond yields, ease back somewhat in recent weeks, and hopes of a soft landing, hopes that a recession can be avoided, growth can still continue to chug along, but inflation can still come down, has sort of been one of the has been the theme that sort of ended the month. So I think the outlook overall for markets is still, pretty encouraging here. We're looking at a situation where most of the indicators in the United States economy are still holding up pretty well. The labour market is still chugging out pretty solid employment gains, but the inflation reports are continuing to show, moderation in pricing pressure. The same in the case in Australia. So we're looking at the Federal Reserve at the moment, remaining on hold, not likely to raise interest rates anytime soon. There's some debate about, how quickly they'll cut interest rates, but I mean, in the main, I think at the moment the data supports the Fed not raising rates, and the Reserve Bank as well is on hold for the foreseeable future, against the backdrop of inflation continuing to ease. So there are, obviously some risks remaining in markets. Oil prices are backing up. We've got to keep a watch on that. There is a risk, conversely, that economic growth in the US actually does start to weaken a lot more than we think. There's some, tentative signs that the labour market is softening, and maybe that softening may accelerate. But at the moment, I think the outlook is fairly encouraging for markets. That's pretty much it from me for now. Thanks for watching. If you want more details on my latest market trends report, please visit the insights section of our website. Thanks for watching, and I'll see you again next month.